500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, and welcome to another TrendSpider technical analysis series video. In this video, we're going to be doing a deep dive into a brand new experimental indicator that we've just added to the platform called the Fair Value Gap Indicator. Now, before we get into the indicator itself and how to use it, let's talk through what a fair value gap is. A fair value gap is most commonly used amongst price action traders and is defined as an instance in which there are inefficiencies or imbalances in the market. These imbalances simply suggest that buying and selling is not equal. Fair value gaps are created within a 3-candle sequence and are commonly visualized on the chart as a large candle whose neighboring candles' upper and lower wicks do not fully overlap the large candle. The reason why a trader might be interested in where these fair value gaps occur is simply that the imbalance created by them can become a magnet for price in the future. Let's add the indicator to our charts and take a look at a few examples. We're going to simply click the 3 dots next to the indicators button. We're going to type in FVG. We're going to select it and hit apply. And now we've got it on our chart. Now we can see the fair value gap located right here. Remember, that's being created because of this low and this high right here, how they are not overlapping within this candle. We could see that price takes a turn to the downside, manages to find a bottom, and it comes right back up and fills that fair value gap before making a big downside move. This would be a really great example of how to use the fair value gap filling to the upside to consider a bearish bias trade. Let's take a look at a bullish bias trade. Check out this example that I found on STNG. We see this big move right here on March 10th that creates the fair value gap. And again, that's between this high and this low. Price tries to get moving to the upside, but it's almost as if a magnet keeps pulling it back to the start of that gap. Once the gap fills here, price is finally able to continue, and it does so quite higher. So now you've seen the bullish trade, you've seen the bearish trade, you might be wondering how else you can utilize fair value gaps on the platform. Now, though you can't scan specifically for fair value gap conditions, since we know that they're simply a product of price action, we can use price conditions to scan for fair value gaps occurring right now. In order to scan for fair value gaps occurring right now, we'll need to utilize price conditions. Now, remember, these fair value gaps are occurring across a 3-candle sequence, so we're going to have to define the price action for each of the candles. I've gone ahead and created a pre-made scan that's going to be looking for both bullish and bearish styles here. In the first condition group, we're looking for a fair value gap that's being created from a move to the upside. Kind of like what we see right here. The low of the current candle, the 3rd candle in the sequence, this one right here, the low of this candle is greater than the high 2 candles ago right here. And we've got that defined as 5%. You can define that as whatever percentage you want. The next condition, it says the close 1 candle ago, that's the candle that creates the gap, is greater than the high 2 candles ago. In the second condition group here, this is looking for a fair value gap that's been created on a move to the downside. So in the first condition, we say that the high of the current candle, that's this one right here, is less than the low 2 candles ago by at least 5%. In the second condition, price close 1 candle ago right here is less than the low 2 candles ago. I've gone ahead and I've run this scan. We got a bunch of results back, and I found a couple of really good examples. First of all, SCU here. This is an example of a fair value gap being created from a move to the downside. So we could see today's high is less than 2 candles ago's low by at least 5%, and the close 1 candle ago is also less than the low 2 candles ago. MX here, this is a fair value gap that's been created due to a move to the upside. So today's low is greater than 2 candles ago's high by at least 5%. And also we have the close 1 candle ago is greater than the high 2 candles ago. So there you have it, folks. Some quick and easy ways to utilize the fair value gap indicator on the TrendSpider platform. Now remember, we do consider this an experimental indicator, so if you plan to use it in your trading, keep that in mind. I hope you found this video helpful, and I look forward to seeing you in the next TrendSpider Technical Analysis Series video. And as always, happy trading. Catch you next time.